When do you have to capitalize a fixed asset and when can you just deduct it? This is a common thing that comes up when a client goes and buys, say, a new computer or a new cell phone or something that is like a capital asset that they would typically have to capitalize. What are the rules behind those? We'll get into those in a second. My name is Merrill Taylor. I am a CPA. I've been working with clients for over 20 years helping them save money on taxes. We've helped them save anywhere from $10,000 to hundreds of thousands of dollars on taxes using niche tax strategies that generally apply to people making $500,000 or more. So let's talk about this rule. This comes up quite a bit. So when you have a business, you have to do accounting. That accounting has two statements. You have an income statement and you have a balance sheet. The tax rules say that when you buy a capital asset such as a computer, that is considered a fixed asset, which means it's an asset that sits on your books. It goes on the balance sheet as an asset, and then you depreciate that asset, meaning you have to take the benefit of that over a period of time. In the terms of a computer is a 5-year asset. So if you go out and buy a computer, you have to depreciate that over a 5-year period. And that's how it was for a lot of my career. Over the 20 years I've worked with people, for most of it, the beginning of it, we had to depreciate even a computer that cost $500. We had to depreciate it over a 5-year period. Cell phone that cost a couple $100 had to be depreciated over a 5-year period. It was kind of silly in doing that. And so people came out and they said, this is kind of ridiculous. If I buy something for $100, let's say they bought a $100 tablet or something, you mean I have to depreciate that over a 5-year period? I can't just expense that. And the ruling was yes, that had to be depreciated. Well, back in 2013, the IRS came out with the tangible property regulations. And these regulations finally gave us a de minimis amount. The IRS came out and said, okay, for most people out there, anything that's $2,500 or less can immediately be expensed rather than capitalized. And so, and then anytime you go above the $2,500 is when you have to capitalize it and depreciate it. So that's given us this very bright line test. So like most computers are under $2,500. So if you go and buy a $2,400 computer, that's under $2,500. You can just expense it immediately, write it all off. You don't have to depreciate it over a period of time. So that's our new bright line test. Now there are rules that can apply to people that have like audited financial statements. So if you have like audited or a certain applicable financial statements, those limits can go higher, like up to $5,000, but those are more rare cases. Like I don't have any clients necessarily that have audited financial statements, so the $2,500 rule applies to most of my clients. Now, how does the $2,500 rule work? Well, the IRS came out and said that the $2,500 applies either per invoice or per item if the invoice is broken out by items. So I often use an example of, say, it's a gym. Let's say that I have a client that they own a gym, and inside the gym they have a number of treadmills. Let's say they go and buy 10 treadmills for their gym, and those treadmills cost $2,000 each. Well, if the invoice, if they're all 10 are invoiced on the same invoice, and there's no split out of those, if it just says treadmills, $20,000, because 10 times 2,000 is 20,000. So if the invoice says treadmills, $20,000, but there's no like breakout of them, well, guess what? They have to capitalize that entire amount, the 20,000, and depreciate it over the life of the treadmills. However, if it were to say 10 treadmills, or better yet, if it just broke down treadmill, 10 times and showed 10 different treadmills on there, and then showed 2,000, each of those as under the $2,500 limit, well, then we could look at that and say, hey, look, we bought 10 treadmills, each of them cost $2,000. Then you could expense that entire $20,000 invoice because each item is now under the $2,500 threshold. So that's how it applies to that. Now you do have to be careful in that when you get invoiced for like multiple invoices for one thing. So let's say that you were to go out and buy a piece of equipment, and that piece of equipment cost $10,000 in total. But they said, you know what, we're going to invoice you 5 times at $2,000 each, and it's going to be payable. Let's say that they stretch it out over a 10-month period. So every 2 months, they're going to send you a $2,000 invoice for this piece of equipment. Now, you have to aggregate all of those. So the piece of equipment really costs $10,000. So in that case, you can't just say, well, the invoice says $2,000, this invoice says $2,000. You can't break it up that way. It's one piece of equipment that's worth $10,000. You have to capitalize that and depreciate it over the life of that equipment. So that's something to watch out for. You can't go and tell somebody like, hey, this equipment's $10,000, send me 5 invoices at $2,000 so I can write it all off. It's not going to work that way. The IRS is kind of on to people on that side. But if it's one piece of equipment that's $2,500 or less, then you can fully expense it that way. So that's how depreciation and capitalization rules work. The de minimis exception, the de minimis rule that we have there with the IRS that enables us to write off anything under $2,500 immediately without it even having to hit the balance sheet, without even having to determine depreciation, is just a straight expense on the income statement. And if you would like more updates, go to our website, taxtutor.com, and sign up for our weekly newsletter.